Welcome back, and let's focus on the deal street. In fact, we have with us Kaustubh Kulkarni, who heads the iBanking team at JPMorgan Chase, joining us now to give us a sense on what's hotting up in the M&A and fundraising space. Kaustubh, always a pleasure to welcome you on CNBC TV 18. My first question, of course, we are seeing a huge amount of activity. What are the top three trends that you are viewing at the moment?
Sure, Nisha, and thanks for having me on your program. The key top three trends that we are seeing is substantial investor receptivity and openness to look at number of exciting companies coming from India to raise capital, both on the private and on the public side. The second key theme is on the M&A. Number of companies across the board, across at least 10 sectors, are looking, evaluating, or contemplating transactions that have either been announced or they'll be doing more. A large portion of it is driven by financial sponsors and substantial desire on their part to look for monetization and exit, as well as deploying new capital, given the fundraisings that they have done for their new funds is substantially larger. So that's the second key theme that we are seeing. And the third key theme we are seeing is companies are utilizing very robust liquidity conditions to term out their balance sheet, to refinance their debt, and also optimize the cost of funding and position themselves for growth. So I think the whole mindset, which has been the key theme in our investor conference as well, is shifting the imperative and narrative in a post-pandemic era back to growth.
Right. And also, Kaustubh, you have spent a few days in JPMorgan's large conference where a lot of global investors participated. What are the key trends that you're picking up from these investors, and what is the mindset towards India? Give us a lowdown of that.
Sure, Nisha. So I think just in terms of the backdrop, we had over 1,000 investors participating in the conference, and of course, over 100 corporates. So as you can see, it's a very good representation of public market equity investors, debt investors, domestic and international, as well as investors on the private equity side. So it's a very representative feedback. If I were to look at it, the key theme and sense coming in from the investors, one is investors also fully agree that India is a country in a very positive transition and the growth narrative and imperative is back. If you look at it, few buckets, one, corporates, the shift and the agenda is growth. Corporate leverage is coming down. Investments are back on cycle for a number of companies. The banking sector is very robust. So all the building blocks for growth actually are very robust, and that's reflected in investor interest, excitement on that. The second part is, which is a very important development, the government initiatives, which have been very carefully planned, announced, and implemented in the course of the last 4 or 5 weeks, have given investors huge confidence that the government is equally concerned and monitoring how they can do and what actions they can take to facilitate growth. So each of the key themes the government has announced, whether it is auto chemicals, PLI incentive, the national monetization pipeline to target raise 6 lakh crores, and getting the divestment agenda back on track, sorting, let's say, telecom sector challenges which were there, which would have big impact not only on the sector but also on the financial ecosystem. So each of the key decisions that the government has implemented in the last 4 to 6 months has given investors enormous confidence that global liquidity probably could be the reason for the investor excitement and frenzy. But the building blocks that the government is implementing in place are very robust. Yeah.
All right, so government is giving enough comfort to the investors, but a large part of fundraise in the startup space has been the theme of last 1 year. How is that trend going to develop? And also, Kaustubh, you'll agree with me that private equity and VC lines have also blurred in this particular period.
Yes, actually, that is so true. Private equity VC lines have blurred. But fundamentally, if you just 12 months appears a long time, but when I think we had so the most transformational transactions that got announced, both on the digital side and retail side, which effectively got number of strategic global financial private equity investors looking at India, looking at digital, looking at consumer that Reliance did across geo and retail. To me, I think that was the defining moment, which effectively put India absolutely at the center of how private capital and public capital wishes to look at India. So I think because of that, I think what you've seen is investors recognize there are very large size consumer-oriented digital companies which are addressing and meeting requirements for the consumer in India, but also creating very exciting business models which are relevant for the global market. Two, in a post-pandemic era, number of countries and companies are looking to digitalize their entire customer engagement. That presents enormous opportunity for what is a core skill set for India on the tech-enabled services and digital services side. And that's clearly resulting in humongous amount of new business creation, where these companies were already there, but they're seeing great growth. So to me, I think because of the fundamental quality of companies which have already been there, and now investors can play both on the private and on the public side, because the companies are also coming, gain critical size and scale, and looking to expand and grow and define, I think, what they can do.
All right. So investor participation in both public and private market, even going forward, is expected. Kaustubh Kulkarni, thanks so much for giving us all those insights on the deal street. With that, it's a wrap on this segment, and I'll hand it over to Surbhi for more.
All right, Nisha, thank you very much for taking us through that conversation. We do have to take a very, very quick break on that note. There's a lot coming up. As we take the break, here's a quick point that our viewers must take note of. CNBC TV 18 and the National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investors, that empowers you to make the right decisions with your money. Now, for smart investors, here are a few guidelines to follow when dealing with your trading accounts. Register for trade alerts through email and mobile numbers. Also ensure that you thoroughly review these transaction alerts on a periodic basis. If you notice any discrepancy or error, you need to bring it to the broker's notice immediately. Keep all documents, transaction statements, and communication records ready for reference if needed for resolution of the complaint.